Hello, I'm Finola Burke from RaaS Research Group, and today we're just focusing on Pureprofile, ASX ticker PPL. Joining me to discuss the company's recent FY25 results is CEO Martin Filz and COO CFO Melinda Sheppard. Welcome back, Martin and Mel.
Thank you very much, Finola. Good morning.
Yeah, good morning, Finola.
So, Martin, we'll start with you. Pureprofile delivered a 1,531% increase in FY25 reported NPAT to 1.5 million, your second consecutive year of profitable reported NPAT. What were the key standouts for you in this result?
Yeah, thanks, Finola. Look, 5 years ago, our first goal was to be operating cash flow positive, which we achieved after a couple of quarters, and then it was about being NPAT positive, and that little one last year, and now to grow from, so even more. So really delighted with that. And I think sort of firstly stands out is we're achieving operating leverage now as a business. So when I look at our core costs across the organization, the company was built to be a $200 million plus organization, and I brought in senior people who knew how to do that. And it's no easy feat going from 5 countries to 14 countries and being a true global player, which we are now. And you can't do that without the caliber of people. But now we're seeing that revenue top line and that gross margin level that we're achieving, as I said, operating leverage. So what's great is it's really healthy growth across the organization. We're maintaining our gross margin, which is fantastic. Margin expansion, even we're seeing. I know we had a little blip. We did a bit of investment and a little bit of Forex, but we're seeing underlying margin expansion and that competitive advantage. We're winning, growing at 19% when a market's only growing, an industry growing at 5% means that we've got competitive advantage. We're winning from clients. So that's the first thing I'm really, really happy with. Looking for us, rest of the world continues to grow at triple. Our ANZ business, that's eating into that low market share that we have, growing that market share. That's where we put the investment. So really happy with that. We added 130 clients last year, again, healthy, good, strong clients. And so what you'll see is those clients, that share of wallet increasing into financial 26 and beyond. The iLink acquisition that we made contributed about 7% of the growth to Australia. So that was a good integration, great company. We've got some fantastic people, clients, and some good data points from that business. And that also a blueprint for future acquisitions should we look to. Internally, we rolled out a number of solutions. You don't see those, but that actually means for clients, we can deliver faster, we can deliver higher quality, and actually more efficiently as well as a business. So we'll start to see that salary ratio to revenue come down over 26 as well. And then doing all of that, we invested significantly in our platform, and launching Data Rubico, which we did towards the end of the year, is a really significant launch for us. And that is a strong platform for future development, winning scalability of clients, new types of clients into new markets. And it really is going to be a backbone of new opportunities for us. And as we technologize the business more and more, it's solutions such as Data Rubico, which will stand us apart. And then finally, we've got a great new board as well. So we had a new chair who joined us towards the end of 24, and now that board's set down 25, and we've got a board that's really adding value. We've got industry experts on that board as well, adding strategy, questioning Mel and I, and thoughts that we have and decisions, which is great because that's a fantastic sounding board. So I really feel that we're all singing, all dancing company at the moment. So really happy with everything.
And Mel, Martin touched on it, but rest of the world is now 45% of total revenue. Do we expect to see this surpass 50% in FY26? Because I mean, that has been the sort of the end goal. And what regions do you think will be the key drivers of growth this year?
Look, I absolutely think it's possible that the rest of the world share of the total revenue will eclipse 50%. We saw 3% extra share this financial year. That said, the ANZ business, as Martin said, had an amazing year of 12% growth, and a lot of that growth was attributed also to the iLink acquisition. So we sort of had that one-off kick by that acquisition coming through, and that obviously helped, slowed down the growth of the total pool for the rest of the world. So and look, in prior years we've seen that grow by 5% of the total share. So there's absolutely a possibility that it will eclipse 50%. And look, where do we think that's going to be? I think it's going to be very similar to what we saw in 25. The UK team has really found its feet. We've got a really great bunch of people there. We've got a number of new sales heads that came in during the tail end of FY24 and in FY25 that we're really starting to see really hit their strides now. So we do think that we'll continue to see really strong growth out of the UK. And then the US, as we've been saying, is such a key market for us. We're really going to focus in on the US this year. We did have really strong growth in FY25 in the US as well. So it is an absolutely key market and focus for us. And then obviously we still would expect we'd see some growth out of our Southeast Asian office and in Europe, etc. So, but really same as what we've been doing over the last couple of years, and continuing that investment into those regions where we really can take more market share.
Mm-hmm. And Martin, obviously, they had very strong growth as you've talked about on the Australian business, but also the rest of the world. Are you seeing the same sort of momentum coming into this financial year? I mean, has anything changed?
We are seeing the same sort of momentum. So we had an incredibly strong growth Q1 financial year 25. So we're lapping a really strong growth quarter. So we need to be cognizant of that, I think, is point one. Point two, obviously, we had first quarter last year, we had iLink, which we hadn't had in 24, which added to that, and we're now iLink's bedded in. So whereas we had, as I said, exceptional growth Q1, there are some mitigating circumstances, but still seeing that the momentum carry forward. It's those, as I said, 130 odd clients that we added last year. They're generating. We added about 5 or so new senior heads across our UK and international business. So they're generating as we come into new financial year. And also just success begets success. So clients are coming to us because they're moving from our competitors. And they're seeing what a great story we are, high quality of delivery, high quality of people. So absolutely that momentum carries on, and it becomes easier in actual fact because we are now seen as a true global player.
Martin, your investment in platform revenue continues to deliver strong growth across both Australia and rest of the world. How quickly can we expect to see the recent tech investment translate into additional revenues for Pureprofile?
Yeah, thanks, Finola. Look, 5 years ago, our platform revenue was $0, and now it makes up about 20% of our revenue. And what platform brings to us is back to that healthy growth, strong margin growth. It gives us scalability, access to new clients we didn't work with before, and access to new markets we didn't work with before. Over the last 12 months or so, we've rolled out over 10 new solutions, some internal, with about 5 or 6 being external. Many incorporate AI, and all of that allows us to be faster, higher quality, and in some cases, more cost effective to clients, cheaper to clients. But all of those solutions we've rolled out in the last 12 months have been to add to platform revenue. So to technologize the company is incredibly important to us. We'll continue to do that. We're a 25-year-old company, so it takes a bit of time to catch up to where the traditional business is. But we've got a really strong foundation with the new solutions, and we'll see those grow and be added to as we move forward.
And Mel, you ended the year with $5.7 million in cash, which is $500,000 more than you had at the beginning of the year, despite investing in platform and making final investments for iLink and paying down some debt. I mean, with an increasingly improving balance sheet, can we expect to see some further acquisitions or capital management initiatives coming from Pureprofile?
Yeah, that's right, Finola. We did have an amazing year from a cash generation perspective. Our operating cash flow was just under $5 million for the year compared to $3.5 million the year before. So we're really proud of the result that we've had through the year. We openly, our strategy is to do acquisitions. So we've obviously come out and said that the US it's a key market for us from an acquisition perspective. So we want to make sure that we've got flexibility around what we can invest in from that perspective. And we also will continue to pay down our debt. We've got about 18 months runway on the facility at the moment. So we'll continue to pay down that debt, and then we'll make a decision next year about whether we refinance or we pay down more of a larger chunk of that debt. So I think the key thing for us is to continue to get the really amazing, fantastic financial results, generate strong cash flows for the business, and then that gives us a lot of flexibility with a strong balance sheet, which is really important for us.
Well, thank you, Martin and Mel, for joining me today to discuss Pureprofile's FY25 results. I'm looking forward to catching up with you through the course of the next 12 months to check on your progress.
Brilliant. Thank you, Finola.
Thanks, Finola.